Yo, what's up traders? Welcome back to another video. Today we are going to look at the pump and dump setups. That is, yesterday two instruments gave us perfect setups. So we are going to start with Nasdaq and finish with the Japanese yen. So as you can see, yesterday was Wednesday, and Wednesday gave us our pump and dump setup. But we have to look at Monday. Look at Monday. Monday gave us our high and our low of the week. Day 1. Day 2 consolidated below the peak formation high on Monday. So it was just a consolidation. Then day 3, Wednesday, the market, as you can see, the market triggered the high of the week, gave us, and it was with a pump to the high, gave us our W pattern, that is in the gap time between London and New York. Then, boom, started falling. Alright? Now, in my mind, as I am seeing this unravel, I'm like, well, they've already exhausted the pump that was during the London session. But there is also this pump here, and we are at the high of the week. Trades that are at the high or at the low of the week have very, very good probability of reversing. So, in my mind, I know that, well, we are buying low, selling high. So, we can look for trade setups at the low of the day for buy setups, but they are just scalps because this is a broken down market. This is a broken down market. It will just be a stop hunt to the people who went long during the London or the first hour of the New York session to continue with the trend. So the first hour obviously sets the high and the low of the session. So that is our reference point when we want to look for our buy setup for that scalp. And yeah, so as you can see, this is the low of the session. Now, as the market continues to breaks down below double zeros, breaks down below the double zeros. And, well, I've not plotted the quarterly levels, but we can look and see. We want at 250. Oh, 150 to 200, so 150 to 100, 125. And as you can see, the market really did come to the quarterly level. So the market comes down, gives us our nice head and shoulders pattern at the quarterly level, breaks out, pulls back, gives us an engulfment at 953. There is our entry. This is not a 5-star trade setup, but you know, with minimal risk to our level. Boom, you have easy pips. Now, my catch was in catching the move falling, well, after the retest. So the market moves stop hands around 75 pips to 100 pips above the double zeros. Does it reach the quarterly level? Nope, but it's above the double zeros. gives us, fails to break above the high, gives us our nice M pattern, break of structure retest, boom, and gives us our engulfment. This is our entry for the continuation of the trend. Your stop loss above, your take profit 75 pips, very nice. Easy 75 pips, easy 75 pips. Now, I took a trade in the instrument called, Japanese yen. Let's look at how it formed. So, the previous day, well, as you can see, we have our Monday setup giving us our high and our low of the week. Then Tuesday extended the high, no problem. Then, was falling, gave us a nice pump and dump setup to the high, then continued falling. Then Wednesday, the market gave us our nice pump and dump setup in the Asian session. Yes, continues higher, higher, higher. Then during the gap time, as you can see, so we have this pump here, we have another pump here in the London session, and yeah, during the gap time, they give us our M pattern and break of structure. So in my mind, I am just looking for the retest and then the continuation. Now, with currencies, it is easier to trade them because, first of all, they don't have a lot of risk and they don't move as fast as gold and Nasdaq. Second, they really obey these levels. So, I am looking for my setup at this level or just near this level, in that range. Now, as you can see, the second hour, the market, well, it does not reach the high or that double zero. But in my mind, I know this is a pump and dump setup. So we have our retest and our pin at 9. So in my mind, I know that even if I get in a bit early in the trading this currency, I still have to, I risk like 15 pips maximum. 15 to 25 pips maximum. And yeah, for a very good setup, it was 19 pips. Now I want to show you my entry because I know most of you struggle with entries. So when you understand that the market has already exhausted its momentum, because as you can see, the market tried coming back to the high, then boom, breaks structure. So it broke structure, retested, and at 9:23 gave us our engulfment. I was in after that engulfment for, now I was targeting the first, this was my pump and dump setup, the one that I was targeting, this pump, this dump. But it was a measured move, so it fell over 100 pips. But anyway, you get in, get your money, get out. Get in, get your money, get out. This is a business. Now, this is why the pump and dump setup is the best. It's the best, my guys. This is the best. So, one trick. Oh, excuse me. One trick that I have come to find very, very useful is actually looking at the pump and dump setups in the 15 minutes time frame. Look at the way it has formed. Now, if you see a pump and dump setup, then you know that even if you go to the 1 minute time frame, you can never be wrong. Or probably 90% of the time you will be correct, because you are just scaling in to look for your entry in a big picture move like this one. So as you can see, I was trading this pump here, but there was also this pump here. Now, I don't know how the market will behave today, but yeah, all you have to do is just sit back, watch, and get in your opportune time. So hopefully I've clarified 2 or 3 things that maybe one of you might be struggling with. Stay disciplined, stay focused, stick to your plan, be consistent, and you'll find that in the long run, you will make money in the long run. So yeah, have a nice day. See you in the next video.